Thanks for joining us for the Executive Series. Today I'm talking to James McDonald, who is the Acting Chief Investment Officer of Hunter Hall Global. Thanks for joining us, James.
Nice to be here. Thanks, Tom.
Now, it's probably understating things to say it's been an eventful month and a half for the company with the departure of Peter Hall.
Sure.
So I suppose what investors are most wanting to hear is about the continuity of the organisation.
Yeah, sure. Look, we've got it really is very much business as usual for us. We've got a great investment team of 8 investment professionals. They've been in the market for 15 years now and at Hunter Hall for about 7.5 years. And our process is really very much the same. I worked closely with Peter Hall for 13 years. We shared very similar views of the world and investment philosophy. The main principles there are small and mid-cap. We've always found great returns in smaller companies. We've got a value bias, so we're looking to buy shares that are trading at a big discount to their intrinsic value. And we've got the ethical filter, so nothing that's harmful to the environment or society.
So essentially, it's no different to what often happens with other fund managers when you have the star of the team leave, and it's just a matter of getting on with the business or the legacy that was put down beforehand.
Totally, but I should point out that over the history of the HHV, I have actually been managing a very large portion of that, around 25%, and Peter's 29%. So you say star, Peter, I guess, was the face of the business, but certainly behind the scenes, actually the other team of guys has really been managing a lot of the money the whole time.
Indeed.
Yeah.
Okay. So let's focus on what you've been doing in recent times. Obviously, an international focus with the fund. Where are you paying the closest attention?
Yeah, well, we've got some great international ideas that are very exciting. We've got a company called Lumentum in the US, which I've followed for about 20 years. And it's really the leader in lasers and switches for telecom networks. And there's really strong demand at the moment. You've got the US and Chinese telecom operators building these optical networks, and then the big internet companies like Facebook, Amazon and Google building these data centres and linking them all up with optical fibre. So that's a really good opportunity. And Apple may incorporate 3D sensors that are produced by Lumentum in its next iPhone mid this year, which would be a huge catalyst for the shares. In Hong Kong, we've got Prada, really an Italian company but listed in Hong Kong. This is quite a non-consensus call. There's 28 analysts who cover the stock. There's only one buy recommendation. They made a few mistakes over the last 3 or 4 years. They overexpanded, too many shops, fashion mistakes, didn't use social media, but they're really turning that around now, and Chinese consumption's starting to pick back up. House prices are rising very rapidly. So that's doing well. And then we've got a US investment alternative manager called Fortress Investment that manages things like distressed credit funds, very cheap, half its market cap in cash, 6 times PE. That's a real value stock. So a couple of names for you there.
Okay, so you've also been quite positive or constructive on gold in recent times, and it's been quite volatile, to say the least, but the macro picture with the election of Donald Trump has been very volatile as well. So how strong are you on gold at the moment? Yeah,
look, I think it's great to have a bit of gold in your portfolio as the ultimate hedge on political uncertainty. And we're starting to see that play out now. Of course, US interest rates are, I think, going to rise a bit more quickly now than we'd thought 6 months ago. Trump stimulus is likely to push up rates. So that will weigh on gold a little, I would imagine. But we've got a couple of really nice small cap gold miners in our portfolio. In Australia, we've got a company called Blackham Resources and Doré Minerals, both in Western Australia. 3 times EBITDA, lots of potential to expand production, very exciting. And in Canada, we've got a company called Richmont, who just had a very nice reserve upgrade last night, was up 10%. And that's held purely in our international fund. So, yeah, I like finding these small companies that have got a lot of leverage if the gold price rises.
Indeed. Yeah. Now, an important consideration is the outlook for dividends. You've announced that you're going to pay a 3.5-cent dividend. That's up from 3 cents at the same time last year.
Yeah.
Obviously, you've...
Very, very pleased about that. 3.5 cents, we're hoping to be able to continue with a steady stream of fully franked dividends to the extent that the fund is able to pay them. But, that's a very nice underpinning on a $1.20 share price. So, nice yield pick up there for investors as well.
Indeed. James, great to talk to you. Thanks for making the time for that.
Thanks a lot, Tom.
And thanks for joining us for the Executive Series.